The Fed hiked rates and mortgage rates fell? Huh? Hey, it's Eric Osnes here from Homebridge Financial Home Mortgage with my weekly update on mortgage rates and the economy and what's going on out there for the week ending July 29, 2022. Yeah, this week the Federal Reserve hiked 0.75% and mortgage rates fell. That's correct. Why? Many in the press don't even understand this, and I spend a lot of time educating my clients. So let's just say it all out loud. No, mortgage rates did not go up by 0.75% this week. In fact, the Federal Reserve cannot directly control mortgage rates. They control the federal funds rate, which is a very short-term rate. It serves as a benchmark for the pricing of things like savings accounts, CDs, borrowing rates for consumer loans, and also business loans. And it does influence prime rate, which is tied to a lot of home equity lines of credit, not mortgages directly. Mortgage rates are driven by the bond market, and the bond market is driven by fear, especially fear of inflation. When the Fed increases the Fed funds rate, mortgage rates benefit because a Fed hike helps to combat inflation. And that's why we're seeing rates actually benefiting this week. But let's be honest, a Fed hike, although good for mortgage rates, is not necessarily good for other things. It makes borrowings more expensive, consumer loans, car loans, things like that. It will cause ultimately consumers to spend less and employers to cut staff and overall slow the economy. It's really strong medicine. After the hike Wednesday, though, bonds did rally, giving us the lowest rates we've seen in quite a few months. So here's the national average for 30-year fixed rate mortgages. Conventional 30-year fixed, 5.22%, down almost 0.5% from last week. 15-year fixed rates, 4.5%, down 0.8% from last week. 30-year FHA and VA fixed rates, 4.75%. Down about 0.47 from last week. And 30-year jumbo rates, 4.6%. Those are down about 0.25% from last week. So all in all, we're pretty happy with the Fed move this week. So the other question that's all over the headlines right now: are we already in a recession? Popular definition of a recession is 2 consecutive quarters of declining GDP, gross domestic product. But that's not the official definition. And there's even efforts afoot right now to redefine the definition so that we have a new definition to avoid that uncomfortable conclusion that we are in a recession. But it's sure starting to look like we are. The first quarter, GDP declined 1.6%. The second quarter, we just got the numbers this week, GDP declined 0.9%, where it was expected to be positive 0.5%. Now, that said, GDP is a bit difficult to calculate just due to the size and complexity of our economy. And there'll be at least 2 more revisions coming up in the near, the coming weeks. So that figure could change just a little bit. So who tells us if we're in a recession? Well, the referees will. And who are they? Well, they are the National Bureau of Economic Research, the NBER. And they define a recession, let me read this here, as a significant decline in economic activity spread across the economy, lasting more than a few months, normally visible in real GDP, real income employment, industrial production, and wholesale retail sales. In their eyes, the slowdown has to affect all the sectors of the economy before they will make it official. So why does all this matter? Well, I don't know. We don't really need to wait for the official call. We're already witnessing signs of a slowing economy, but people hearing that R word will affect the buying habits of consumers and ultimately bring down inflation. And when the economy slows, mortgage rates will fall. That's why I care, because I'm going to be waiting there on the sidelines for that to happen, because we have a ton of mortgages made over the last year and a half that will really be able to benefit from lower rates as we go into that change in the economic cycle. The rates are going to follow the economy, and we do expect those to go down in the near future. I'm always here to answer your questions and help solve those complex financial story problems. Just reach out anytime. You can call me 206-915 Eric, 206-915-3742. You can find me on social media. Just look for Eric is my banker, or email me, eric@ericismybanker.com. And also be sure to listen in on our weekly radio show, Open House with Team Reba. That's on AM 1300 and AM 1590 in the Seattle market, Saturdays at 2, Sundays at 3, and always, always, always on podcast. Been doing that show for over 7 years now. Hope you have a great weekend. Hope this information is helpful. Talk to you next week.